Yeah, I know, but I'd have a different take on it. I think that you're real, like, just, we're showing like the 17.8 overall return here. I think you could do better than that, but it would come in the form of consistent over time rental increases, because we both know that rental increases have been a heck of a lot more than 2.5% a year.
This is a, I don't want to say hands off or simple because not owning real estate is not hands off or simple. Um, but it's a straightforward deal where I can get somebody in cash flow from day one.
Yeah, there's definitely an interesting factor about this property. It seems a bit unique compared to stuff we've been looking at. Welcome back to REI Hot Seat. Andrew Hines here with Jacob Campagnaro for a virtual session. I'm
Hello.
enjoying sunny Florida, and Jake is in the cold, but that's dedication. We're here. We're going to go over a deal. So this is a real live Sixplex, not purpose built though,
There
right?
is.
Or is it?
Oh, not purpose built. No, it's a retrofit sixplex. Um, Fully renoed top to bottom, nice units. And I wanted to bring this one on today, Andrew, because number one, it's an actual live deal. Um, some of our listeners may be interested in it. I think it's very, very, very attainable, and the
Mhm.
numbers look good, right? And there's so many people
Yeah.
that are just saying, Jake, find me a deal, find me a deal, find me a deal. Well, guess what? I
Yeah.
found you a deal. So
Yeah, the big thing is like a deal that'll actually cash flow, right? Like at surface value on acquisition will cash flow even at current mortgage rates. And that was the thing that I saw that said, oh, that made me think, hey, let's talk about it. But
yeah, so and I think you're the
yeah,
perfect person to bring on because you're so familiar with London where this property lives. Um, and you know the different areas and everything. So I'd love for you to chime in and kind of speak to uh
yeah,
location and all of that goodness.
yeah, because this
But
is
why don't
actually
you
listed, right? Do we want to just like show it? Because it's your listing, it's listed. We might as well just bring it up, right?
yeah, I can bring some photos up.
Can I do a street view? Is that like, yeah, you bring
Sure.
some photos up. I'll do a street view. Hang on here. So we'll just do this. Okay, so this is the building, and some people may know it. Some people may know the guy that owns it. He's in my network, in Jake's network. So an area of London that's seen a lot of reinvestment. This is that like recreational center for kids. I don't really know, what do they call it? The Market, Western Fair District Market. Isn't this the old Kellogg's factory? I could be wrong, but this is right in that pocket. And then you've got several different stores, but you're on Dundas Street. Um, but this is one of those areas that used to be sort of stigma area, but has been just improving and improving over time and become a very popular spot for a lot of investors. Um, so the idea of being able to get a deal that potentially cash flows, I definitely want to jump into those numbers. But describe the building to me, Jake. What's it like? What's it like? What are the units like? What's the breakdown?
Yeah. Um, so as I mentioned earlier, Andrew, so it's a retrofit sixplex. We have two basement units. The remainder of the units are above grade. I will, as we mentioned, I'll put some photos so everyone can kind of see the renovations that were done there because they're absolutely beautiful. The investor who owns it did a fantastic job at increasing rents and uh, fully renovating the building, interior, exterior. So there's quite a bit of work done to it. This is, in my mind, let's call it a turnkey asset that somebody could come in from day one, pick it up, and just continue operating the way it is. And we're going to show you how to finance this on the front end to be
Yeah.
cash flow positive, and we'll work from there. You will
Okay.
note, I'll just put a little asterisk there. You'll see unit size. We're just getting the units measured. So I don't
Okay.
have the exact sizes right now, but let's assume one bedroom unit somewhere around 500 square feet. And the bachelors are a fair bit smaller,
Like 350 or
300,
300?
400. Yeah, yeah.
Okay. Okay, and then, the one thing I'll point out here is like these rents are not, super high. Like these are like most people seeing these rents are going to say, "Whoa, that seems quite affordable." So, when I see this and it shows like here's the current rents and here's what we could do and here's the potential lift, seems like a very believable number. Having not, I've never owned a building myself and marketed it, but it seems like a very believable number. So there's some built-in upside there, it looks like. But
Yeah, for sure. And
let's
and I
not.
and I think Andrew, like you can even go more. You can actually make those numbers a little bit better. You'll see there actually is a unit leased right now for 1375.
Yeah.
Um, right. So what I did was just take a very, very blanket conservative number and apply it to
Hmm.
this.
Sure.
And we're just doing some tolerances right now, essentially.
Perfect. Okay, so
Yeah.
worth noting is in your pro forma, actually, just your financial analysis, you used the actual rents, the current rents, not factoring in any upside. So as you get that natural turnover, there may be, some upside there. That's not being factored in. What is the 1,200 in other income here?
Laundry income.
Laundry income. Okay. So we've got actual figures for taxes, insurance, maintenance. You've done 830 a door. So you're following that CMHC guideline, and there's a reason for
Yep.
that. We're going to get
Yep.
to it. Management, you got 4.25, and then we've got salaries caretaker at 555 per unit, right? So that could also go towards your management costs.
And yeah, and sixplexes are always really a really interesting asset class because it's on the cusp of commercial versus residential.
Yeah.
And yes, you can get CMHC financing. And so we're running it with the CMHC underwriting process here, which is way, way over what any typical listing would usually run. Right. And
Yeah.
Andrew, we've looked at enough properties together to know that. And I'm sure
Yeah.
our listeners have as well. Um, but like maintenance, like property management and maintenance, usually people go 5%, 5%.
They do, right? So what does this work
Salaries.
out to be? Is that's more than 5%. But you know what? Like I like the conservative like look, right?
Yep.
Especially with an older building, although it's been renovated. Just anything like that, I just like to have a buffer. So it's actually pretty awesome that you got the management and the 2% replacement reserve. I mean, those two things together really help.
And here's
Pad
the
that
thing, and
number.
I always say this to my clients as well, is like, hey guys, we're this is tolerances. This is purely math to say what is this going to operate or potentially operate like.
Hmm.
But the reality is like, subtract the 2% replacement reserve for now because it's completely renovated building.
Yeah.
Salaries and caretaker, like realistically, it's a sixplex. There's no grass. Like it's an urban sixplex, you know.
Yeah.
Um, there's a bit of snow removal and that's about it. So again, take away that, keep the 830 for maintenance and keep the
Yeah.
425 for management. And like there's some significant cash
Yeah.
flow that is going to end up in your bank account here.
Is there no parking in here in general, or just only a couple of parking
There's
spaces?
one parking spot.
Yeah.
Um,
So
and
that
it's kind of just used more for,
yeah.
if somebody needed it, there
Hmm.
is parking across the street though at the fairgrounds. You can get a permit, you can
Yeah.
park there permanently.
Okay,
So
so
anybody who
that
needs
actually
parking
helps a
has that.
ton, right? So the rents are a bit lower, but I mean, there's potentially even an opportunity maybe to buy the passes and you can attract a tenant saying parking included. So that's actually pretty cool. Would they do that? Would they sell a landlord passes? Probably would, right?
Yeah,
Or you
yeah.
could,
So most places we did this in Hamilton actually, where we
yeah,
leased up a building and there was no parking. So we just went to the city. It was $100 a year for parking. And we gave everybody that leased with us that needed it a 1 year
okay,
parking voucher,
nice.
right? And so
Okay,
very similar scenario here. If they need it, you have it.
yeah. So with only one spot, the reason I asked that, with only one spot, it makes perfect sense that the tenant would clear their own snow. The other people don't care. The snow on the steps, obviously, you're going to want to make sure that you comp somebody for that. But that's a minimal cost to have somebody take care of that for you.
Yeah,
Common
so you could really
utilities are pretty
lean
high
lean
here.
this out. Yeah,
You you could, right? And there's potentially room to get maybe these utilities numbers down. Is this all separately metered, or is all common meter, or all
so
utilities together?
all separately metered, other than the one bachelor in the basement. That's on the house meter,
Okay.
right? And then the gas and water is also bulk. So it's only the hydro and 5 units are separately metered, and that's why that
Right.
hydro number is a little bit, or common utility number is a little bit high.
Yeah, and there might be an opportunity to get this number down by putting heat pumps into the individual units.
Well, that's it, right? Like,
Yeah.
again, we can go MLI and talk that. I know we've talked the death out of it, so I don't really want to go into it
Well,
right
that
now,
that
but
could be a longer term plan because, like, I think this one you were suggesting to me off camera that we'd be looking at more of a buy it first, do it like regular CMHC, and then I think there's potential maybe to blend
Mhm.
and extend with MLI. Do you think, or not that you
Yeah,
necessarily need to, but the
no,
potential?
you definitely could, right? And
Yeah,
and um, we'll get into it when we start talking about financing here, but
yeah,
I've run it very, very conservatively, and it still
yeah.
shakes out perfect. So
Yeah,
I'm
that's why I like this one. You don't often see like deals that just work. Like you could just turnkey buy it and it works. It's
yeah,
like it's fully tenanted right now, right?
yep,
So
yep,
you could
yep.
theoretically come in and just start collecting rent. I mean, of
We're gonna
course,
give you we're gonna give you the keys, the
yeah.
deposits, and you run with it.
Yeah, it's never actually that simple. Anyone who's owned property knows. But, that's more on the simpler side compared to a lot of what we've done.
Yeah,
Um, okay, so 899 works out to 150 a unit ish, 5.6% cap rate, which we were remarking off camera, 2 years ago, that would have been a 4.6 cap rate potentially, or
yeah.
somewhere in that ballpark. So things have changed already. The expectation around cap rates has already changed to a degree. Who knows? I think that's going to change further over time as rents continue to climb. That's my prediction. Uh, okay, so 80% you're figuring we can get with CMHC wouldn't be a full 95, but you don't really need it. So at a
Yeah.
719
Well,
mortgage, 35
and
year
we've what
AM.
yeah, and what I've done, Andrew, is like I ran it at a 35-year AM. It's an older property. It's not
Yeah.
purpose built, right? Technically, you can get up to 40-year AM on CMHC, traditional CMHC mortgages, right? And so for an exercise, just throw that at 40 years for me. And I don't know
Yeah.
if anybody would want this, but we could also explore this,
Yeah.
right? And
Yeah, you
boom,
can
40
juice
years.
the cash
Now you
flow
just
two
made,
more years or $200. Yeah, I mean,
yeah,
if it were
yeah,
me,
$2,000.
I'd probably do it. I don't know. I like an amortized mortgage.
Yeah,
But 40 years versus 35, if I can get $200 more cash flow today, I'm interested in that. Um,
exactly. So we can try for the 40, expect the 35,
yeah.
4.8% interest rate CMHC is actually a little bit even high depending on where the bonds are today. They've been fluctuating quite a bit lately. Uh,
Okay.
so you could even drop that. Like we put a deal together at 4.6, 4.5 recently. So again,
Yeah,
I want
well,
to run it
nothing's for
conservative,
sure, right? And things could change, but yeah.
and
So
that's
I
it,
mean, at
right?
4.6,
I'd rather,
it's 775 versus 687. Yeah,
yeah.
yeah.
Yeah, I'd
Okay,
rather,
so
get at the end of the day, show it a little bit more, little bit conservative. I'm not going to kill
yeah,
it, but a little bit
yeah,
conservative, and that way we can. There's
sure,
room for buffer there, and if it looks better,
yeah,
great.
yep. Okay, so let's go through the rest of these numbers here. So it's cash flowing 600 plus, which is pretty cool. Let's look at what it would take to get this property. So you got 400 and sorry, 14.5 pretty much in land transfer,
Transfer.
broker fee. There's a 1% here. That's for your financing, correct?
Yeah, so broker fee would be if you want to use a mortgage broker to go get the CMHC.
Yeah.
Um, Not necessary. Again, you can back that out. That could be zero. It's almost it's $7,000, so it's not cheap. Um, but at the end of the day, I've already worked with a broker on this.
Yeah.
And so I know what I'm saying in this performance accurate because I have somebody backing me up on the finance side. And
Yeah. Yep.
if I
That
can
makes
make this
sense.
happen, $7,000 to make this happen the way it's laid out, I think all day is worth it.
Yeah.
That's why we have that in this.
Yeah. That makes sense. I think you'd be kind of crazy not to use a broker. You want somebody who knows what they're doing in
Well,
this
that's it,
type
right? You're
of.
working with the bank and one wrong document or
Mhm.
you put something in wrong and all of a sudden the bank spits it out and says denied,
Yeah.
we don't like it. It's just
Yeah.
make it simple, right? So then we
Yeah.
have property reports. Um, Again, property reports, if we're going CMHC, they might need an
Mhm.
environmental on this. I doubt it because of the price point.
Yeah.
Um, so we're assuming, building condition and an appraisal there.
Okay.
All right.
Um,
Legals, 3,500.
yeah, legal 3,500, CMHC application 900, 25,000 as the fee. That's a percentage based fee, right? That's
It
a
is a
percentage of the
percentage
loan.
based fee. And I was, this is the thing, Andrew. So that fee is actually baked into the mortgage,
Yeah, yeah, that's not
right? And
something you're
so,
closing with. So this is showing down payment is only 179, so that's not factoring in the CMHC fee.
yeah,
Yeah.
yeah.
Okay. So that's looking pretty good overall. And to be in for under 200. I mean, I know it's not the days that it used to be, but that's pretty different from most things we see just sitting on the market. Um, okay, so in terms of pay down, we got that as part of our return calculation. Passive appreciation. Some are going to argue about that number. I mean, at the end of the day, none of us know. Like going at 2.5% is sort of targeting traditional inflation rate, which
Yeah.
I've always been pro. I've seen that for a long time. Like real estate sort
And
of followed inflation.
Yeah, and my argument on that, Andrew, is, in here we don't have active appreciation. We're not
Yeah.
showing, this is simplified, right? And so
Yeah.
that 2.5% to me is like, hey, you got some unit turnover,
Yeah.
you have a little bit of rental increase every year,
Yeah.
um, you know, with very minimal
Right.
appreciation,
Yeah.
right?
Yeah.
But that appreciation is going to come over your turnover,
Yeah.
your rental increase, your efficiencies as you can find them in the building.
Yeah.
So
I
I can
have a
argue the
different take on it.
2.5.
Yeah, I know, but I'd have a different take on it. I think that your real, like, just, we're showing like the 17.8 overall return here. I think you could do better than that, but it would come in the form of consistent over time rental increases, because we both know that rental increases have been a heck of a lot more than 2.5% a year. They've been, on average in the market, probably what, like 5 to 8, 10. I think 8% was last year.
Well,
So
do me a favor, Andrew. Like, take out the CMHC premium. Just make that zero for
yeah,
fun for a second, because
yeah.
the 25 is actually being calculated into that return there.
Oh,
So,
okay, yeah, yeah, yeah. So it's not part of it.
right. So technically that was actually incorrect, and I apologize,
Yeah,
but that's going to be baked into your mortgage. So that premium
yeah,
should be in the mortgage. Now you have
yeah,
196 total closing cost, which
yeah,
bumps you up to 20% ROI,
yeah,
4.2% cash on cash return, and
yeah,
that's how I ran it in my back end system. So this is an
yeah.
older model. I apologize.
Yeah, yeah, you're right. That number does factor in the CMHC fee. So it'd be slightly better than that. It looked like over 20%, which
It was
again, we've
20.1.
crunched a
Yeah.
lot of deals. I'm crunching deals all the time. I'm not seeing people getting 20% overall return on properties anymore. For a while there, of course, we were seeing it. We were seeing 30%, 40%. If active appreciation, even more. But it's been a while
And
since
here's
I've
the
really
thing,
seen
right?
stuff.
You
Yeah,
can continuously do your rental increases. At the end of your term, you renew your
yeah,
mortgage, interest rates are down, let's say. Um,
mhm,
and now that 20% ROI you've had for, 5 years running is now going to be,
yeah,
much, much, much higher. And
yeah,
and
yeah.
it works that way.
Yeah,
So
if
this
you
is
do
a
get an opportunity to refi, you can increase it further. But I mean, yeah, everybody has to kind of play a balance game with that stuff.
Yeah, yeah.
Yeah.
So yeah, this is a what do we call it? This is a I don't want to say hands off or simple, because not owning real estate is not hands off or simple. Um, but it's a straightforward deal where I can get somebody in cash flow from day one. The area of town is, like you said, regentrifying aggressively. They've put a ton of money in the area. And you're getting the tenant mix there, right? So it's overall, I think it's a great little investment for somebody who's got, the
Mhm.
175, the two, let's call it 200 to be realistic. Um, and wants to get into some real estate, this is the property for you.
Yeah. Yeah, there's definitely an interesting factor about this property. It seems a bit unique compared to stuff we've been looking at. I just, like I said, I don't see it too often. This specific area of London, one of the reasons I like it is you're actually pretty darn close to the highway. Like, you just
Yeah.
shoot over to Highbury and then straight down. So if you're a commuter, and then also the city's sort of been, growing out that way. There's some new industry out there. So there's kind of some reasons that this area should be getting, better and better over time. Sort of like what happened with Hamilton, just kept getting better.
Yeah.
Um, you know, Interesting opportunity here for sure. So, yeah, I think that kind of covers it for this deal, Jake. If people want to know more about this, what should we do? Where should we send them?
Yeah. Yeah. So you can always go to the link below. Um, if you come in, just put a little note in there that you're calling in about, or you're logging in about this particular property. We'll be happy to reach out to you, provide you the financial information. And this is a great scenario for anybody who's going to come in. We're going to run through these numbers just like Andrew and I did. Right. So anybody who's actually interested, and because this is a live deal, this outro is a little different than we usually do. Um, but we'll run through this scenario exactly like I just did with Andrew. We'll find where we can get that 200,000 to buy the property from. Is it a refi? Is it a sale? Is it a, HELOC? Um, and then we can help you with the process and take you all the way through to the closing. So it's again, I think this is a great little one to bring some investors in, and use the link below, and we'll go from there.
Cool. Yeah, Jake, thanks. Thanks as always for sharing your wisdom here. It's cool to see how to make these deals work, and looking forward to more of
Yeah.
them.
Well,
But
we got a few more for next week, so let's keep it going.
yeah, you keep enjoying that cold weather there, and I'll I'll see you again next week.
All right, talk then.